What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at two massive companies that are both announcing their earnings tomorrow after hours, and they are Apple and Amazon. I personally do own shares of Apple. I do not own any shares of Amazon. However, both of these companies are in very similar positions. They're both trading at very high valuations compared to where they have traded at in the past. So what we are going to do in this video is we are going to take a look at what analysts are expecting from earnings this quarter, as well as into the future, the valuations around these companies, and then I am going to give my opinion on both Apple and Amazon. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. As I mentioned, tomorrow, Thursday, August 3rd, Apple and Amazon are announcing their earnings after hours, and Apple is currently sitting at a $3.1 trillion market cap, and analysts are expecting them to come in with earnings around $1.19. Amazon currently is sitting at a $1.4 trillion market cap, and analysts are expecting around 34 cents in EPS. Let's start off by taking a look at Apple. They have had an absolutely incredible year, up almost 54% year to date. And if we look over the last year, they're still up around 16%, and from all-time highs of around $175, they are up around 10%. And for earnings tomorrow, analysts are expecting EPS to come in at $1.19 and revenue to come in at $81.86 billion. If we zoom out a little bit, we can see what analysts are expecting over the next couple of years. So they have an average estimate for 2023 of $5.98, a low estimate of $5.73, and a high estimate of $6.29. For next year, however, they are looking at a reasonable amount of growth, up to $6.59 for the average estimate, the low estimate coming in at $5.66, which is actually a decline year over year for the low estimate, and then the high estimate coming in at $7.21. So as I mentioned, the low estimates actually decreased year over year for Apple's EPS numbers, and that happens because of the cyclicality of the iPhone market, and that can also be seen in terms of their revenue. So here we have the trailing 12-month revenue, then we have the quarterly revenue, and then we have the year over year change down here on the bottom. And we could see a similar trend happening in 2017, where the revenue actually declined year over year in the December quarter around 4.5%. And then this happened again just last year. So from 2021 to 2022, they saw a decline in revenue of around 5.5%. In my opinion, the biggest threat to Apple's stock price right now is their valuation. They're currently trading at a 29.67 forward P ratio. And if we look 8 to 10 months ago, they were trading at a 21.83 forward P ratio. Obviously, a lot has changed over that time period. We have seen inflation go down in a massive way, and people are really starting to anticipate and price in that the Fed is going to be dropping interest rates. However, if we don't see that happen, that could cause Apple stock to fall along with the rest of the market. So there are always exceptions to the rule, and there's really no one size fits all to any strategy. And when you're looking at PE ratio, it doesn't necessarily mean that a company is overvalued, because they can always increase their earnings, and that will help bring down their valuation. And that's something we have seen with Apple over the last 5 years. So right now, according to macro trends, they have a P ratio of 32.7 for Apple. And if we look a couple years back, they were actually trading at a 35.24. However, they increased their earnings per share in a very significant way, and that also led to the stock price increasing along with it and valuation dropping down. So that is something that we could see here in the future. However, you have to keep in mind that the interest rate environment we had back in 2020 is significantly different than the interest rate environment that we have right now. So personally, I am not adding any shares to my Apple position. I like the position I have built out, but that isn't to say that this company could not come in and beat on EPS numbers and revenue. They have been an outstanding company over the last couple of years and been coming in with quarter over quarter beats that have driven the stock price higher, even as the valuation has been trading at a premium. And that is something that is great to see for a company. We've seen that also for this company that we're going to look at next, which is Amazon. Amazon is actually in a very similar position to Apple. Year to date, they are up almost 50%, trading at a stock price of $128, when at the start of the year, they were trading all the way down in the 80s. And right now, analysts are expecting EPS numbers to come in at 34 cents and revenue to come in at $131.34 billion. And over the next couple of years, analysts are expecting getting some solid growth out of Amazon. We can see that the average estimate for 2023 is $1.45 in EPS, the low is 85 cents, and the high is $1.87. However, for 2024, there is again some significant growth for Amazon, coming in at an average EPS number of $2.35, a low of $1.30, and a high estimate of $3.72. And EPS over the last 5 years has been all over the place for Amazon. We can see 4 years ago, they were bringing in around $1.20 in EPS for the trailing 12 months. However, in 2020, their business exploded, with people being stuck at home. Really using Amazon Prime was a primary way for shopping. And what we saw is their EPS spike all the way up to $3.24 at one point. However, over this same time period, Amazon was looking to expand their business massively. We saw interest rates drop incredibly low, and Amazon tried to capitalize on that by building out a lot of their warehouse space. And that has really affected their EPS over the last couple of years. We can see that they have a number of negative quarters here of EPS where they brought in negative 38 cents, negative 20 cents, and they finally started to get back to profitability. And these negative EPS numbers have really hurt their valuation. We can see that they are currently trading at a forward P ratio of 82.64. However, 8 to 10 months ago, they were trading all the way down at a 46.95. For a company like Amazon, having negative EPS numbers is not something you want to see. You want to see them continue to grow the business and continue to grow these EPS numbers. However, with them stopping a lot of this expansion of the business that has really drained a lot of capital, this could be a great time to get into Amazon before they really go on their next run of very positive EPS numbers. So personally, I do not own any shares of Amazon, and I'm not looking to buy it right now, but it is in a very interesting position. Right now, it's trading at around $130, and if we look at all-time highs, they're up around $185. That means there's about a 40% upside to all-time highs if the stock were to trade back up to that level. And in my opinion, if we start seeing interest rates drop, Amazon cut back on their expansion of warehouses, we could see Amazon's EPS numbers really take off in a major way. And I think that would contribute to the stock shooting up higher and potentially even breaking through all-time highs. And I don't think there's much downside with the company right now. I think it could trade down into the 100 to maybe 115 range. However, the business has expanded so much from 2020 to where they're at now that I think it's very difficult for them to trade down into this $80 range that we saw previously this year. So tomorrow we will get a lot of good information about both of these businesses and where they are headed in the future. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.